SMF MMTs. What I'm going to point out, I have a NASDAQ comp chart behind me here on a weekly level now. But I also have a very powerful Amex, and it's called Interactive Week Internet Index. And these are the names that go in this. Now, look at here. You've got Baidu in here. Okay. You've got FFIV in here. You've got another very important one in here, Google again. And most importantly, you've got that Priceline.com in here, 11.99 movement. And one of the things that we're going to find out here, there are bear and bull ETFs that go along with these internet ones. And I will have Ken Plagg and Rick Goley find the bear and the bull ETFs that go along with these so that the rest of the SMF MMT network can be updated correctly, promptly, and understandably. Why we are going to look at the weight. You got Amazon in there now. Okay, so these are the players that are in here now. Okay, so having said that, when we take a look at the weekly trend, we can clearly see, and we'll be doing a lot of work around this MMTs moving throughout the end of the year. And the thing about it is that we came down. This is where we broke out. So let's do this one first. And it looks just like the NASDAQ comp. But on 8/29 of 2010, this was that 2010 breakout. The thing that I want to emphasize is where the key support levels were on Friday after the horrendous selling that had taken place in volatility and how volatility works. This is the breakout. That's the first top. Okay. This top from here to where this reversal was right there, you'll notice that this top here is a lower top, and this was that long reversal. This was the beginning of the year short, but that was that very long 7-week decline with the little 1, 2, 3 week rally right back up here. That was your little summer rally, but you made lower lows down here. And that meant that the leadership over here was in correction mode, and the leadership dollar point wise and market capitalization and lots of other factors in this weighted index is very important to understand. So we trade the leaders in here every day. We trade the Amazons, we trade the Baidus, we trade the Pricelines, and we trade the Netflix, the other leader in this index, and we trade the Googles, we trade the FFIVs, we trade the leadership that makes us as a sector indice. Okay, and it's your internet one in this respect. Once again, though, when you go over to the NASDAQ comp, is the NASDAQ comp chart looks almost identical to where the first correction was here. Okay, and technology and internet stocks had let it down. Here's that 7-week one down here. That's your little rally back up here in the NASDAQ comp, and then you make the lower lows right over here, kind of like where the 2010 resistance level breakout was to that peak on the NASDAQ, to the higher blow off top, and then from the very same level is the double top, and then the big 3-week reversal down to this key area of support. That's your NASDAQ comp. Now, having said that, the NASDAQ 100, NASDAQ comp are heavily weighted with these big leadership type high beta stocks that we trade. You'll see here how the tops were being put in. When this started to break, we were breaking hard here. We came down to the 100-week moving average and got support right here in that pocket right there. So last week's movement between the highest volatility that these markets have seen in a long time is that the bottom up in equities, and how bear markets put in bottoms and why they put in bottoms, but what are the leadership to those bottoms, just as the leadership was to the sell down to making another lower low. And we said clearly, if you go to stockmarketfunding.com for the new MMTs, you can see back on every single short we called. It's all on the stockmarketfunding.com before the fact, not after the fact. No. And there are bear and bull ETFs, and this is the analysis. This is the movement now. This is that bottom-up process. So that meant that each one of these leaders that sold down, like the Googles and the Pricelines and the FFIVs, they all had bottoms, and they all came up off their bottoms from the selling. They were being accumulated up. Now, moving forward in the dog days of August, today, 8/13/2011, time 11:07 a.m. Pacific Standard Time, is you can see the broad-based buying in here, and the bottom up. We had a 2-day reversal last week. Thursday it started, was a bottom hook. Now, notice they all got the same big wicks here on the NASDAQ comp going up, and the same thing here in this index here, or let's call it a sector indice, okay, because that's what it is. And look at that big weekly wick. That's an accumulative bottom. That's an accumulative bottom. And then each one of the equities had their cumulative bottom. Moving forward in the dog days of August before going into September, we're going to be watching the bear, the bull ETFs that are tied here. Everything that we do for trade management is identifying that the weekly moving averages have all crossed down, just like they crossed over the 40 here. Things are not looking good, but it's how bottoms get put in. This is going to be the neckline right here. Then the secondary neckline would be back up here. And same thing here. Here's the neckline on the NASDAQ comp right there at 25.99. Here's another neckline that was a very important neckline in here that it had broke during that 7-week reversal cycle. So we understand the clear directional movements, and the trade management will be bear ETFs and bull ETFs, and then we will use options trading, calls and puts. Deflated call side, put to call ratio side also reflects these bottoms in. And moving forward, it's going to be very important that each and every single day that we find out where this attempted bottom is, both on the NASDAQ and this internet weekly chart on the IIX, okay, interactive week internet index. These are the names in that particular weighting, and these are the ones that we trade in here, okay, that make up the majority of the weighting of the price movement, which these names in here, the leadership is all we trade. We don't trade anything else. So basically, there are great opportunities off Thursday and Friday's double bottom or the bottom support level. Once it hit, everybody started stepping in, short covering. High frequency volume machines were leveraging up the trends, and everything was bouncing as accordingly. And once again, MMTs last week, today is Saturday, but from Monday through last Friday, you were taught what would lead up to a bear reversal bottom up trade versus the sell down. We already did the short down on everything. Now it's about how the markets are going to react and how these buyers are going to step in, and outside of all the contagion and all the fear and everything is how these indexes are going to act here. Okay, and they've all hit critical support levels. One thing about the NASDAQ comp up here is that technology and internet is heavily weighted in this NASDAQ, and so far in the sector indices you can see the exact patterns, everything that we've gone through. You can also see from where the original high was down to that low, you can see the distance there from this diagonal trend line. And trade management, learning how to trade bear reversal bottom up entry and exits with stop management, options management, put calls, put to call ratio, inflated, deflated, and it goes on and on when it gets into the trade management. I'll conclude this for now, but this is what your focus is going to be on, and we'll move forward.